Hello, very good afternoon to all, and I hope that you all have a great, restful and wonderful weekend. Very good afternoon, and welcome to a brand new week ahead. Good afternoon to all. This is Kelvin here. Today will be Monday, the 17th of February 2025. So before we start our day dose of market insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has taken shape yet over the last Friday in terms of the intraday performance of the various cross asset classes, as well as any key economic data, relevant news flow that impact this movement as well. So on last Friday, let's take a look at the movement of the major US stock indices. So if you look at the major US stock indices, I would say it's a rather mixed bag faction. So what we could see over here is the S&P 500 actually go nowhere. It traded sideways, almost ended last Friday session where it started at the start of last Friday session, almost unchanged, negative 0.1%. The outlier is the Nasdaq 100, which is up 0.38%. The Dow Jones and the Russell 2000 underperformed with a minor loss of negative 0.37% and negative 0.10%. So one of the reasons why the Nasdaq 100 outperformed was the very strong performance of the two mega cap technology stocks, which I want to share with you guys over here. So it's actually Apple, which is up 1.27%, followed by Nvidia that is up by 2.63%. And because of these two heavyweights, and as well as metal up 1.11%, they managed to actually see the the Nasdaq 100 flirting close to its all-time high. And today's Asia session, the Nasdaq 100 managed to breach its all-time high. Later I'll share with you the chart of the Nasdaq 100 when I cover the short-term intraday technical outlook of it. So the positive news flow driver actually came primarily from Apple. So Apple actually this was not actually released on their official website, but being actually released on X, which is formerly Twitter, by Tim Cook. As you all know who is Tim Cook, Tim Cook is actually the CEO of Apple. So on he tweeted over at X stating that get ready to meet the newest member of the family, Wednesday, February 19th. So it actually hinted potentially there could be a launch of Apple product, potentially market speculation, a lower version of the Pro version, which called the Apple SE range of iPhone. Price will be at a cheaper price, but with higher capability compared to actually the iPhone 16 or series. So this is the SE series, but they have a much more better capability right now, but it's definitely lower price than the iPhone 16 series. So that could actually potentially drive sales of iPhone going forward to some of the markets that do not have much purchasing power to purchase the much more pricier iPhone 16 and iPhone 16 and iPhone 16 Pro. So that actually explain the movement of the Apple share price on last Friday that actually caused the positive feedback look into the Nasdaq 100. And also one particular driver that's caused the movement of the FX market, where we see on the FX market on last Friday, it actually actually see dollar weakness. And for those who follow our daily dose of market insights on Thursday and Friday, we do flip to a intraday bullish bias on the euro, the sterling, bearish bias on the dollar yen, and neutral on the Aussie dollar, taking into account of this looming short-term weakness of the US dollar index from here. So what we could see over here is it's more like a positioning driven situation for the dollar, because if you look at the dollar index, as you could see over here, let me share with you guys on the screen. Where is the dollar index? Okay, this should be the dollar index. Yeah, this dollar index. So ever since the dollar index can't survive the 50-day moving average at 107.50, we see a series of short-term intraday weakness coming back into the FX market. That means, i.e., market participants starts to trim their last 1 month pass of optimism of this dollar strength. So potentially we could now start to see a mean reversion decline in the US dollar index. Okay, over here, okay, if you want to, this is the dollar index. Okay, so the RSI has already been inching downwards below the 50 level mark, hasn't hit the oversold region yet. So there could be a chance that on a multi-day perspective, okay, intraday we may see a bit of bounce here and there for the dollar strength to revive. That's intraday, but after that bounce, potentially from a multi-day perspective, at least maybe half to the middle of this week over here, we could start to see a further slide on the dollar index, retesting the 200-day moving average, which is all our key medium-term pivotal support at 105.50, and also the former range, triangle range resistance, bullish breakout in November, now turns into a key pullback support at 105.50, which is correspond to the key 200-day moving average. Right, so two things technically driven as well, and as well as on Friday, there's actually a related news flow that is more sensitive to the US economy, indirectly impacting the forward guidance of US Federal Reserve monetary policy. Is a rather lackluster retail sales figure. So retail sales figure for US that was released on Friday, the month-on-month one, came in way below expectation. So market is expecting negative 0.1% month-on-month. For the month of January, it came in at negative 0.9%. And even on a smoother cyclical basis, the year-on-year one for retail sales also came in slightly below 4.2% year-on-year, against 4.4% that was recorded in December. So it starts to show some signs of so-called hesitance by market participants to be so bullish on the US dollar, because there could be a chance that the Fed may still cut this year. All right, but in fact, if you look at the CME Fed Watch 2 over here, is that they are still showing maximum only 2 cuts. Okay, how do you see that? So if you look at the CME Fed Watch 2, if you look at the one that is currently priced right now, that means taking into account of the upcoming US Federal Reserve monetary policy meeting that got to be held on 19th of March, market is still looking at a high chance of 97% that the Fed will stand pat. That means they will not cut or hike the Fed funds rate, maintain it at 4.25% to 4.5%. So if you look at the aggregated tab, market is still now assigning higher probability down the calendar. Previously, there was a high chance of about 70% in June, 18th of June, but now this has been reduced to 60% roughly. The higher chance will come in July, the 30th, and 17th of September, both assigning high probability of 85%, or 80% and 85% chance over here. And there is a slight chance of 60% that the Fed may ignite another interest rate cut of 25 basis point on the 10th of December 2025 FOMC meeting. So market is now still looking at either 1 interest rate cut or 2 interest rate cut of 25 basis point each before 2025 ends. So the Dow is almost unchanged over here. So it's still representing a not so dovish Fed, because the fixed income market is still anticipating there is some form of stagflationary risk that could creep back into the global economy because of the uncertainty that surrounding Trump trade tariffs. Sometimes he may sound a bit of hawkish, and in between he tried to actually tone down to gain some form of extraction in terms of negotiation, some meat from Trump's targeted US major trading partners, that is Canada, US, Canada, Mexico, China. So China is rather mild right now, only 10% tariffs being gone. but Canada and Mexico previously Trump targeted at 25% tariff. So far that has been on for a month. Next up, Trump said that potentially implied that he may target EU next. All right, over here. So there's still a lot of uncertainty going on, and potentially that could all this kind of trade tariff, if it go through, and we start to see tit for tat measures between the major trading partners of US, that could lead to what I call stagflationary risk coming into the global economy. So that's what explain why gold remains firm, trading at around 2009 to 2880 level as we are speaking right now. So later I'll touch on the gold technical, short-term technical outlook and the key levels to watch from here. So another news flow that is actually supporting the market is more of the current outperformance of the Hong Kong related stocks, which is i.e. a proxy of the China stock market. So if I share this chart, I've been sharing with you guys since last week, right? So this is a 1 month rolling performance as of 17th of February as we are speaking right now. Over here, so I could see the red line is the Hong Kong 33 that's listed on platform, CFD product. So view this as a health or the gauge of the Chinese stock market. So the Hong Kong 33 has been outperforming the major US stock indices almost on a 1 month rolling basis. Over here, that's a big gap. And the performance of this Hong Kong 33 also has a positive feedback loop with the German 30 CFD index. Why? Because we know that sentiment is all because of sentiment. German 30 or the Eurozone also rely on Chinese consumer spending in terms of tourism and in terms of buying of luxury product in Eurozone. All right. So if we start to see continued movement upside on the Hong Kong 33 indices, be it the Hang Seng Index, the Hang Seng H shares, the Hang Seng Tech Index, that could actually lead on to a feedback loop into China consumer sentiment to increase as well, because stock market is a representation of sentiment. All right, if China consumer sentiment increase, there's a high chance that they could continue to see spending and upward tourism into Eurozone. So that actually explains why the German 30 index is actually trading hand in hand or move in direct tandem with the Hong Kong stock market. And on top of that, German 30 also has been benefiting from a rather much more dovish ECB as compared to the US Federal Reserve. That means much more higher chance of liquidity infusion at a greater magnitude into Eurozone. All right, so that's also benefiting the Eurozone stock market. So I'll use Germany as a benchmark over here. And also this China market, i.e. or Hang Seng indices stock outperformance has also been driven by this more of a signaling impact from China top leadership that they are now getting much more relaxed towards China big tech operations or their business model in China. Still recall that previously China big tech has been clamped down since 2020 2021 over here, especially targeting Alibaba. So right now Alibaba, Jack Ma, which is the so-called the former figurehead of Alibaba, has now been seen being granted as an audience with China presidency in today's kind of a top CCP leadership meeting with the Chinese top leaders from the private sector. So it gave a kind of a signal that the Chinese top leadership is now getting much more lenient towards China big tech companies. That means a market view this as a positive sentiment that also drive up the China big tech stocks as well. And we know that Tencent share, Tencent is one of the big tech stocks and it has a significant weightage in the Hong Kong 33, i.e. the Hang Seng Index. So the Tencent share also rallied as well, but this is also on the backdrop that it may start to partner with DeepSeek. So we know that DeepSeek is actually the one of the what we call key bullish catalyst that kickstarts this ongoing China stock market Hang Seng benchmark stock indices outperformance against the US major benchmark stock indices, because DeepSeek is a kind of a managed to actually has a cutting edge AI capabilities, almost on par with Western's AI LLM model, like run by the OpenAI, but at a lower operational cost. And right now, this DeepSeek being partnered with Tencent, that means much more Chinese citizens is able to get DeepSeek, we call it services, and also could potentially open up to much more wider global audience via their WeChat search. All right, so we know that WeChat search also can be accessed internationally as well. So Tencent is planning to integrate DeepSeek into its WeChat suite of product line over here. So that's so driving the positive feedback loop into the Hang Seng stock indices from here. All right, so that is the key driver that I want to share with you. Key news flow, its impact on the various uh, cross asset classes that I want to share with you all that has taken shape over at last Friday and into today's Asia session from here. Okay, so with that, now let us now have a deep dive into the short-term intraday technical outlook that I'd like to share with you on the various cross asset classes, starting with the FX market first. So before that, let me expand my screen so that you guys could have a better view of the charts. Okay, so let me start with the FX market. So we know that the FX market, the dollar has been weakening against all the major currency. So like I explained over here is that on the intraday basis, this dollar strength may come back to do a bounce because last Friday push down on the dollar weakness has been oversold on a shorter term time frame chart. So what do I mean by that? By looking at the euro dollar. So we know that euro dollar over here is now fast approaching our resistance level, the euro dollar. So this is my resistance level that I have on last Friday, where we do have a bullish bias. And what's interesting over here is that the hourly RSI now has started to shape a bearish divergence. All right, from here, what you could see. Okay, price action same high, same high, same high, but the RSI in parallel start to shape a lower high. That means what I call in parallel. Same high in price action of the euro dollar, but RSI lower high, and it starts to exit from the overbought level that was made on last Friday. So now there could be a intraday weakness on the euro dollar, at least a minor pullback using 1.0530 as my short-term pivotal resistance for today. We will flip to a intraday bearish bias on the euro dollar for a potential minor pullback. First support level to watch will be 10440 slash 10460. So let me put it in writing again. Oops, sorry. Okay, 10460 slash 0440. Okay, only a breakdown 1.0440 may see the potential minor pullback scenario extended on the downside, exposing the next near-term support level at 1.0360, which is so confluence with the 50-day and the 20-day moving average. However, if price action starts to inch up higher and have a hourly close and a breakout above 1.0530, today's intraday bearish bias for that minor pullback scenario will be invalidated to see the continuation of this multi-week now starting from the low of 3rd of February mean reversion rebound scenario within a major downtrend phase of the euro dollar to continue and extend, exposing the next near-term resistance at 1.0565, followed by the psychological level at 1.0660, which is the minor swing high area of 18th of November and 6th of December last year. So i.e., given the bearish divergence that is being depicted on the hourly RSI, there could be a risk of a minor pullback scenario taking shape for today on the euro dollar. Hence, we flip to a intraday bearish bias using 1.0530 as my short-term pivotal resistance. First support level to watch 1.0460 slash 1.0440. Only a breakdown below 1.0440 may see the minor pullback scenario staging an extension leg for the euro dollar. All right, so that's the outlook on the euro dollar on an intraday basis for today. Similar to the sterling dollar as well. So sterling dollar hit our first resistance zone at hit our resistance zone, second resistance zone at 1.2580, 1.2610 on last Friday, where we have a bullish bias. And what's interesting over here is that the RSI has broken down below a parallel ascending trendline support after hitting a overbought level on last Friday, and now has starts to print a series of lower high. Okay, so that also indicating some form of minor pullback scenario that could take shape on the sterling dollar for today. Hence, we will flip to a intraday bearish bias for the sterling dollar as well, using 1.2670 as my short-term pivotal resistance level for short-term pivotal resistance level for today. The one-time Fibo extension taken from the low of 13th of Jan and correspond to the minor congestion area of 17th of December and 19th of December. First support level to watch will be 1.2540. Only a breakdown below 1.2540 may see the extension of this potential minor pullback scenario extending to expose the next near-term support level at 1.2480, which also correspond to the 50-day moving average as the next acting as the next near-term support level as well. Only a hourly push-up and a breakout above 1.2670 short-term pivotal resistance will invalidate today's bearish bias on the minor pullback scenario to flip back to the continuation of the mean reversion rebound, retesting the 200-day moving average, I think, as a next intermediate resistance zone at 1.2780 / 1.2810, which correspond to the 1.236 Fibo extension, and the graphical swing high area of 11th of December and 6th of December last year. So that's for the sterling dollar. Now, turning our attention next will be the Asia Pacific dollar, major dollar pair, starting with the Aussie dollar. So Aussie dollar, we flipped to a neutrality stance on last Friday, and right now it's actually a pierce up above the upper neutrality zone, which is 63.30 level, heading towards the next resistance at 64. So 64 level is very important, psychological, and if you look at the daily time frame chart, is in fact the former major range complex range complex range support level that was previously in place since 13th of October 2022. It's been trapped in this kind of triangle-like major range support, and this major range support was broken down on the downside in mid-December last year, and right now the price action is seeking to do a retest at this dotted line here, which is the former major range triangle-like range support, now turns into a pullback resistance at the 64 level. All right, so with that, I'll be using this 64 level here as my short-term pivotal resistance for today. We will flip to a intraday bearish bias stance for at least a potential minor pullback scenario that could potentially unfold. First support level to watch will be 63.30. Only a breakdown below 63.30 may expose 63 figure next. However, if price action starts to shape a hourly close and a breakout above 64, then this potential mean reversion rebound could potentially extend to the upside, exposing the next near-term resistance level at 64.30, followed by 64.70 next. Okay, so that's for the Aussie dollar, using 64 figure level as my short-term pivotal resistance for today. We'll flip to a intraday bearish bias for a potential minor pullback scenario that may occur. So that's for the Aussie dollar. Now with that, let us now focus our attention lastly on the dollar yen. So dollar yen continues to plummet as expected. It broke below the 200-day moving average, which is our first support level that we highlighted on last Friday, and now it's fast approaching the minor swing low area of 7th of February, which is the next support area at 150.95, followed by 150.70, which is the congestion area of 5th of December and 10th of December as well. And now, given that the RSI has really hit the oversold level, there could be a chance of a minor bounce taking shape going forward at the start of the European session to retrace some of the weakness that has been seen in today's entire Asia session over here. So as long as this potential minor bounce that may take shape during the start of the European session and stretching into the early half of the European session thereafter, as long as didn't surpass above the 15280 tighten short-term pivotal resistance that I have right now, which also correspond to the 200-day moving average as well, didn't surpass on the upside, that means the minor bounce may actually pause somewhere around this area here. As long as below 15280, we will still maintain our intraday bearish bias after this potential rebound has ended, and the price action may revert back to its ongoing multi-day weakness that has been seen since the retest of the 220 and the 50-day moving average closely on 13th of February. Next support level to watch for here will be 15095/70. A breakdown below it exposes 14965, which is the lower limit of this ongoing medium-term descending channel that is in place since 10th of January, coming close to already for 2 months, and as well as the 1.236 Fibo extension level taken from the minor swing high of 10th of January as well. Only hourly close and a push up above the Titan key short-term pivotal resistance level for today at 15280 will invalidate our intraday bearish bias to see a mean reversion rebound extension towards the 15370 slash 4, which is close to the 20-day moving average. Above it slightly sees the 50-day moving average coming in, acting as a resistance zone at 15450 slash 155 figure level. So i.e. Potentially there could be some form of a minor bounce taking shape during the start of the European session, but there is no bearish divergence yet, so indicating there is no clear signs of a bearish exhaustion in this ongoing minor downtrend of the dollar yen. So as long as this bounce didn't surpass 15280 short-term Titan short-term pivotal resistance that we have for today, we will still maintain the intraday bearish bias on the dollar yen. Right, so that sum up the short-term intraday technical outlook on the dollar yen. All right, so with that, now let us now focus our attention to the major stock indices, starting with the Hong Kong 33, representing the Hang Seng Index over here. So the Hang Seng Index hit our first resistance level at the start of today's Asia session. It hit it over here, 22,830, before shaping that pullback. So we will have a Titan key short-term pivotal support level for today at 22,140, which is the intersection line of this two channel over here, the shorter ascending channel, which is from the low of 3rd of February, and the longer ascending channel upper boundary now turns into a pullback support level, all coinciding at 22,140 level over here. So, and if you do the Fibo retracement of this ongoing bullish acceleration trend from the low of 3rd of February, project it all up the way to today's morning Asia session high, is correspond to the 23.6% Fibo retracement as well. So using a Titan key short-term pivotal support level at 22,140, we will still maintain the intraday intraday bullish bias. Pardon me. Let me repeat again. As long we will use a Titan key short-term pivotal support level for today at 22,140 on the Hong Kong 33. Maintain the intraday bullish bias above 22,830, sees the next resistance coming in at 22,120 slash 23,120 slash 23,270, which correspond to a Fibo extension cluster and the upper limit of this much more steeper shorter term ascending channel that is in place since the low of 3rd of February. Only hourly close and a breakdown below 22,140 Titan short-term pivotal support for today will invalidate today's intraday bullish bias on the Hong Kong 33 to kickstart a much more deeper minor corrective pullback scenario, exposing the next near-term support level at 21,630, followed by 21,295 next. So that's for the Hong Kong 33. Up next will be the Japan 225, representing the Nikkei 225. So it continues to be stuck in this kind of complex range configuration. So it's more like a complex range a minor range configuration within a medium-term complex range configuration that is still in place since late of September 2024. From here, right, it continues to trade in this kind of complex sideways range configuration, move on a medium-term time horizon and a shorter-term minor time horizon. So with that, I have no conviction of any trend bias for today, so I will rather turn neutral for today, as price action again dip down below the 20 and the 50-day moving average in today's Asia session. So neutral between 39,250 and the lower limit will be the 200-day moving average that is so far been supporting the price action since the low of 11th of February, which is last week, pardon me. So neutral between 39,250 and 38,770. Only an hourly close above 39,250 may see a push up to expose the next near-term resistance zone at 39,710 / 39,830, which is the upper half of that medium-term sideways complex zone. Medium-term sideways complex range configuration that is still in place since late September last year, which I have flashed out for you guys earlier on. Okay, so that's for the Japan 225. So what's up next for the European stock indices, which is being represented by the German 30 or the German DAX. So the German DAX, as expected, it hit our resistance level on last Friday, where we maintained that bullish bias, 22,600 defined by a Fibo extension cluster. But what's interesting is that upon hitting this level, the price action on the hourly RSI continued to see a very clear lower high, which is a bearish divergence, a very clear bearish divergence over here, as it also exited from the overbought level and now looking to inch down to breach below the 50 level mark over here, indicating that upside momentum is lacking right now for the German 30 index over here. So with this bearish configuration that is being flashed out by the hourly RSI, we'll be flipping to a intraday bearish bias for a potential minor pullback scenario that could unfold for the German 30 in first step, using 22,600 as my short-term pivotal resistance level. Near-term support level to watch on the intraday basis for today for 22,310. Only a breakdown below 22,310 may expose 22,130 next. However, if price action have an hourly close and a breakout above 22,600, then this impulsive up move sequence continue to see the next near-term resistance coming in at 22,800, followed by 22,930 / 23,030, all defined by a Fibo extension cluster level. So i.e., I'll be using 22,600 as my short-term pivotal resistance for today. Given the bearish condition that is being flashed out on the hourly RSI, we'll flip to an intraday bearish bias for only a potential minor pullback scenario to unfold on the intraday basis for the German 30. Now, what's up next for the major US stock indices? For the major US stock indices, before I touch on the US Wall Street 30, I want to highlight that today there will be a public holiday in US where the major stock exchange will be closed. The New York Stock Exchange and the Nasdaq exchange will be closed as well. When the US the cash market will be closed, where the US market open for today at 10:30 p.m. Singapore time. So today we have this 17th of February is Washington birthday, so the New York Stock Exchange will be closed as well, and as well as the Nasdaq exchange. All right, so there could be kind of a not so much activity when the US session open for today on the major CFD stock indices. So with that, if you look at the configuration of the US Wall Street US Wall Street 30 that is representing the Dow Jones Industrial Average. Price action, yes, floated up towards our resistance level that we highlighted on last Friday, where we flipped to an intraday bullish bias. Price action continues to be trapped below this minor descending trend line of the US Wall Street 30 since 31st of January. So given that it's coming very close to the upper limit of this kind of sideways range configuration that is in place since 31st of January, we will switch to a neutrality stance for today. So neutral between 44,840 and 44,190. So flip to a neutrality stance for the US Wall Street for today, 44,840 and 44,190. Only an hourly close above 44,840 will validate a bullish breakout scenario on the intraday basis. Next resistance level to watch, 45,090 / 100, which is the current all-time high area for the US Wall Street 30 from here. Now, next up will be the Nasdaq 100. So Nasdaq 100 during the Asia session we are speaking right now is breaking above the 22,135, this line here. So this 22,135 is in fact the previous current all-time high that was printed in early December, right? On early December this last year. which is on the 17th of December. And yes, the hourly RSI is in the overbought level, but there is no signs of a bullish exhaustion because there's no bearish divergence. Price action continues to trend higher in the RSI as well. So yes, it's overbought, and given that the US cash market is closed for a public holiday today, there could be some signs of a minor pullback. So as long as this minor pullback didn't surpass below the tightened key short-term pivotal support that we have on last Friday, where we flipped to a intraday bullish bias, now this tightened short-term pivotal support will be at 21,970. The next resistance level to watch will be a Fibo extension level at 22,360/410 level. However, if the price action suddenly break down with an hourly close below 21,970, then this movement upwards on last Friday could be in jeopardy. That means that could be some form of a corrective rally rather than an impulsive up move, and that could potentially expose the next near-term support level at 21,845, which is the former we call it minor trend line resistance or medium-term trend line resistance that was in place since 17th of December, the current all-time high. Previously, it got rejected on 22nd of January, got rejected again on 7th of February, and got rejected last week on 13th of February, which is on 13th of February on last Thursday, before it staged that bullish breakout. On Friday, now turns into a pullback resistance at 21,845. Breakdown below it exposes the next support level at 21,680. So a breakdown below 21,845, that means indicate that last Friday push up was more of a corrective rally and rather than the start of an impulsive up move to seek higher high to print the next higher all-time high next. So these are the key levels to watch. So to maintain that intraday bullish bias, whatever pullback that may take shape thereafter cannot surpass below 21,970 short-term pivotal support, a tighter one that we have for today on the Nasdaq 100. Right, so that sum up the intraday technical outlook on the major stock indices. Now, turning our focus now will be the commodities market. So let us start with the gold XAU/USD. So gold XAU/USD last Friday we flipped to a bullish bias. Indeed, this is a key short-term pivotal support level. It bounced, shaped that V-shaped recovery, almost hit our first resistance level at 2,945, 2,940, which is the current all-time high area here, before shaping that sell-off. And this sell-off lasted during today's Asia session and also managed to survive again at the 2,880 short-term pivotal support level. So this is indeed a key support level to watch to maintain our intraday bullish bias for gold XAU/USD. First resistance it got to surpass will be 2,945. Only a breakout above 2,945 exposes the next intermediate resistance cluster zone at 2,990/3,000, which is psychological level. Only an hourly close below 2,880 will invalidate an hourly close and a breakdown below 2,880 short-term pivotal support for today will invalidate today's gold intraday bullish bias to kickstart a much more deeper minor mean reversion decline sequence or scenario, exposing the next near-term support level at 2,845. Below it potentially sees 2,812/2,795, which correspond to the rising 200-day moving average as well. So that's for gold XAU/USD. So lastly, West Texas crude oil. So West Texas crude oil managed to came down, almost hit our support level at 69.80. And what we could see over here is that price action starts to see similar low, but the hourly RSI starts to print out a bullish divergence over here. All right, so with this bullish divergence, there could be a chance of a minor mean reversion rebound taking shape in today's intraday session. So we'll be using this similar swing low area that has been met on today's Asia session at 70.60 level. So we'll flip to a intraday bullish bias for a potential minor mean reversion rebound to take hold 70.60, but only watch the first resistance level, which is the 50-day moving average, acting as a similar intermediate resisted support zone of 72.50/90. Only a breakout above 72.90 may see the extension of the mean reversion rebound, exposing the next intermediate resistance zone at 74.67, 74. Okay, pardon me. This one is a bit wrong. We have typo error. Should be 73.90. Okay, I repeat again, 73.90/74.67, which also correspond to the 200-day moving average, acting as a resistance level, and also the downward sloping 20-day moving average as well, confluencing at the next resistance zone at 73.90/74.67. Only an hourly close and a breakdown below 70.60 revive the bearish pressure to expose the next support level 69.80, followed by 68.80, which is the swing low area of 11th of December and 20th of December. So i.e., given the bullish divergence that's been flashed out on the hourly RSI, we'll be using 70.60 as my short-term pivotal support for today. We'll flip to a intraday bullish bias on the West Texas oil for a potential minor mean reversion rebound that may play out to revert back towards the 50-day moving average, acting as a similar resistance zone at 72.50/72.90 next. So that's for West Texas crude oil, and also sum up the intraday technical outlook on the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today, in the European session, there will be rather quiet, not much of a data to look out for. And during the US session, we have two Federal Reserve officials speaking. We call it the Fed Speak. 10:30 p.m. Fed Harker, 11:20 p.m. Fed Bowman will be speaking. Then thereafter, early Asia session, you have 7 a.m. Singapore time, Fed Weller speaking. And at 9:30 a.m., this is rather important, is one of the key BOJ officials, Bank of Japan, Takada. He will be speaking at 9:30 a.m. Singapore time. That could actually influence the movement of the dollar yen and the yen crosses. And 11:30 a.m. will be the RBA interest rate decision. That's before the 1 p.m. daily dose mark over here. So something to look out for as well on the Aussie dollar, as it's now fast approaching that key pullback resistance level at 64 figure level. And thereafter, 12:30 p.m. will be the RBA press 12:30 p.m. will be the RBA press conference that is held tomorrow as well. So this is the key data to look out for, and key data events to look out for today, and as well as tomorrow Asia session before the start of our daily dose at 1 p.m. tomorrow. So with that, that's the gist of today's daily dose. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.